Let's bring in Jason Trennart. He's the chairman and CEO of Strategas Research Partners, which is a Baird company. Jason, do your views reflect those of Secretary Yellen's? And if so, how are you investing? Or if not, how are you investing?
Well, Becky, I think, we might put a little bit of a finer point on it, which would be that we think a recession is likely. It's more likely than not next year. And I think there are some indicators of that, in particular, the inversion of the yield curve, just the amount of tightening that the Fed has done, a decline in profit expectations. All those things I don't think augur particularly well. There is a chance, of course, you get a soft landing, but I don't think the odds favor that. As a result, we would be still quite defensive, which means higher levels of cash than normal. I think cash is not trash now. You're getting some very attractive yields at the short end of the yield curve, the Treasury market. And I think in terms of sectors, we like healthcare and consumer staples quite a bit. We like energy as well, but for different reasons. Those are more structural reasons. They're not really consistent with a recession, but we still think they're going to outperform.
Earnings recession is something that another guest mentioned earlier today. You think that's going to be the case in some industries, at least?
I do. Listen, earnings recessions are about twice as likely as economic recessions. They happen twice as frequently. But so sometimes you have an earnings recession without an economic one, but it never goes the other way around. When you have an economic recession, you always get an earnings recession. The average decline in earnings during a recession is 30%. The median is 20%. We're forecasting a decline of 10% in S&P 500 operating earnings next year. And I just don't think that's really consistent with a market that's trading at about 18 to 19 times trailing earnings. So that's why we're cautious about the market at this stage.
So, Jason, if you look historically, I don't know how far you could go back at previous recessions, how many of them were induced deliberately by the Fed, the Federal Reserve, and how many are sort of a business cycle phenomenon? And we tried to get around that and tried to, immunize our economy from these cycles. I don't know if it's even possible to do that, but I'm just wondering, it's not always that the Fed raises rates and causes a recession. Normally, recessions are predicted for a variety of reasons. Sometimes they come true, sometimes they don't. But do you know, everybody remembers Volcker, that brought those rates brought in a recession, but it's not always like that, is it? It's not. Maybe I'm still hopeful we don't have to have a hard landing, that inflation can moderate and the jobs market, other things seem so solid that maybe we just continue along.
Yeah. Joe, I'm hopeful too. It's just the hard part about this is that the Fed's tools are such blunt instruments,
right,
that it's really hard. It's really hard to nuance or bring down inflation when it's already at 8%. But you're right. It doesn't always have to happen this way. Personally, I know it sounds horrible because people lose their jobs and it's tough, but I feel very strongly that recessions are a part of the business cycle. It's part of capitalism. It's what allows the system to grow. I think that, in my opinion, the fool's errand was to try to completely obviate any need for a recession through quantitative easing. And the problem with that, it's a nice goal, except that it creates a lot of malinvestment. It creates a lot of foolish investments, and you're not allowing capital to be priced appropriately. So, in my opinion, it is possible, for the reasons that Secretary Yellen pointed out, that we don't have to have a recession. This could be just part of a cyclical process, but a lot of that starts with allowing the cost of capital to find its natural rate.